Car insurance is one of those things every American has to pay for, yet almost nobody understands how the price works. And that's not an accident. The industry has built itself around one idea: the less you know, the more you pay. Most drivers don't even realize that two people on the same street, with the same car and the same driving habits, can pay completely different prices, not because one is safer than the other, but because the insurance company placed them in different categories without telling them. Today, you're going to hear the secrets companies avoid mentioning, secrets that can save you hundreds, sometimes even over $1,000 every year. Think about this for a second. When was the last time your insurance company told you, "Hey, we lowered your price because you've been a great customer"? It almost never happens. But when prices go up, they quietly send an email or letter hoping you won't notice. They rely on the fact that most Americans are too busy to compare quotes, too distracted to check their policy, and too loyal to switch. This is called the loyalty penalty, and it costs U.S. drivers billions every single year. But the moment you understand what's behind your premium and what you can do about it, everything changes. The truth is, insurance isn't about fairness, it's about prediction. Companies collect thousands of tiny details: your zip code, the age of your car, even how many insurance quotes you check online. Yes, even checking quotes can change your price. If you shop around often, some companies assume you're preparing to switch and offer you better discounts. Others might raise your rate because they think you're a shopping customer. This is why people with the same profile pay totally different amounts, and most drivers never find out why. Let's change that today. One of the biggest secrets is risk tiers. Insurance companies place every driver into a tier, sometimes without any major reason. You might be in a higher tier simply because you stayed with the same company for too long. Yes, loyalty can literally hurt you. Companies assume long-term customers won't leave, so they slowly increase the price every 6 to 12 months. Many Americans who switch providers once a year actually save between $200 and $600 without changing anything about their coverage. Then there's telematics. If you've ever heard about Drive Safe and Save, that's what it is. But here's the catch. Companies don't promote it strongly because it gives people huge discounts. Telematics tracks your braking, your speed, your driving at night, and even how often you drive. If you're a safe driver, this program can cut your bill by 30 to 40%. Insurance companies know most drivers don't fully understand it, so they don't push it. But it works, and it's legal in almost every U.S. state. Another secret is credit score pricing. In many states, your credit score affects your insurance more than your driving history. You could have 0 accidents, 0 tickets, and still pay more simply because your credit score dropped by 30 points. And a small improvement, like paying down one credit card, can drop your insurance at the next renewal. Most people never connect credit scores with insurance pricing, but companies rely heavily on this data. They won't tell you this, but improving your credit even slightly can be one of the fastest ways to lower your bill. Insurance companies also adjust their prices throughout the year, and the cheapest time to shop is around 3 to 4 weeks before your renewal date. That's when companies release their most competitive quotes. Even asking your insurer for a new customer discount works surprisingly often when you mention a cheaper competitor. Low-mileage drivers, people who drive less than 7,500 miles a year, can get instant reductions. But you have to tell the company, and one of the most overlooked hacks is the defensive driving course. A simple online class can give you a multi-year discount in many U.S. states. Before filing any claim, always ask if it will appear on your record. Sometimes paying out of pocket can save you far more in long-term premium increases. When you combine even a few of these secrets, the savings add up fast: $400, $600, even $900 a year. Car insurance isn't a fixed cost. It's a game. And now, you know how to win. Another money-saving trick is the defensive driving course. Most Americans don't know that a simple 2 to 4 hour online class can earn a discount that lasts for years. In some states, the discount is mandatory. It doesn't matter if you have a perfect record or a few minor tickets. This course works for almost everyone, and it's one of the easiest long-term savings tools available. Now let's talk about claims. Even if an accident wasn't your fault, the record of that claim can appear in the National CLUE database, and your price can still go up. Before filing any claim, no matter how small, always ask your company if it will affect your premium. Sometimes paying $100 or $200 out of pocket saves you far more over the next 3 to 5 years. When you combine these strategies, shopping early, raising your deductible, removing duplicates, improving your credit, using telematics, taking a defensive driving course, and managing claims wisely, you start to see real savings, not small savings, big ones, $400, $600, even $900 a year. And that's money that stays in your pocket, not in the pockets of companies, hoping you never ask questions. Here's the truth. Car insurance isn't a fixed bill. It's not something you're stuck with. It's a system, and now you understand how it works. You've heard the secrets, you've seen the tricks, and you know exactly how to lower your cost. Most drivers keep paying more because they assume the price is non-negotiable, but you're no longer one of those drivers. The knowledge is yours. The power is yours. And from this moment on, you will never look at car insurance the same way again. Your credit score also plays a huge role. In many U.S. states, a low credit score can make your premium jump even if you've never had an accident. A small increase in your score can instantly reduce your bill when your policy renews. Then there's the deductible strategy. Most drivers stick to the standard $500 deductible, but raising it to $750 or $1,000 can drop your yearly cost dramatically. If you haven't had an accident in years, this move alone can save you more than you'd ever lose in a rare claim. And here's something almost no one checks: duplicate coverage. Many drivers pay for roadside assistance, rental coverage, or glass protection, even though they already have those benefits through their credit card or car manufacturer. Removing duplicates can cut down your monthly bill more than you think. At the end of the day, car insurance doesn't have to be a silent money drain. The companies may not tell you these secrets, but now you know exactly how to protect your wallet. Compare your rates, remove what you don't need, and take advantage of every discount they hide in the fine print. The smartest drivers always pay less, and now you're one of them.